Today, we're going to be talking about a much bigger time frame than what we normally talk about on this channel. And I will say that there's going to be not only technical analysis within this video, but we're going to be going over a lot when it comes to market psychology, when it comes to market makers and how they see, how they trade with retail, and the types of traps psychologically that get played on retail all of the time. This is going to be a very, very informative video and a type of video that I don't normally talk about. And most of all, a type of video that I don't really see many content creators talking about. First thing that we're going to cover is going to be this inverted head and shoulders that's been setting up on Tesla on the daily and the weekly. Now, I opened some leap calls for the end of this year last week, which are up massive. I'm up close to $17,000. I closed out my May calls today just because in my opinion, the RVR is just not quite there on the May calls still, but the December calls are doing very, very well. And I plan to hold them. Tesla can move all the way up to $250, maybe even $280. So what is an inverted head and shoulders? Well, normally this will occur when we have a steep sell-off followed by a bounce, which you can see right here. This is where our first shoulder would be, followed by a steeper sell-off and a very fast rebound, rejecting at this level, which we're going to talk about the neck level in a moment, but then pulling back and instead of making a lower low, bounces again and test this resistance level. This would technically be your shoulder right here, followed by your other shoulder here, and then the head is this area down here. There is, however, a very important resistance level, which is called the neckline, basically where your collarbones would be if you were looking at a shoulder, head, and a shoulder. The neckline is the most important aspect of the head and shoulders or the inverted head and shoulders because that's the pivot level, aka the level that we need to break in order to start taking out price targets. So our pivot resistance level is right around $200 to $210. I would really honestly say 200 was that neck level, which is a high confluent area because $200 is a major resistance on many different time frames. And what I was looking for, and the reason I grabbed my May calls, was a push through this $200 level, which would drive us up to 220. And you can see this is where my take profit levels were, as well as my stop losses. I'm not looking for just these small moves. I want to get something bigger. And so you can see on the weekly chart, this inverted head and shoulders is looking like we could have a significant breakout. We're gonna be looking for a couple of things. Number one is going to be volume. We need to see volume continue to come into this as we test the resistance level that we're at right now at $210 and continuing to push up to 220. 220 is going to be that short-term resistance that I'm looking at. But when I'm thinking of Tesla in 2024, which is what we're looking at right now, because every one of these candles represents a week, meaning that this trade is probably going to take multiple months to maybe even a year. So if you were to enter this position down at $200, which right now we're at 206, but if we could get the pullback down to 200, or you would have entered at that right time, our next area of resistance is going to be up here at 220, which we talked about. But if we break through there, our take profit level would be up around 240/250 or up around $280. The way that we find this is by taking our Fibonacci retracement tool, going from our swing high back here, November of 2021, down to our swing low of January 2023. And you can see that this is where our Fibonacci levels would be set up. And what we're looking for specifically is the 0.5, which is going to be our major resistance level. And then the biggest one is the 0.618. So if we can continue to push through here, our next level is 220. And then from there, all the way up around 260. My take profit level is going to be between 260 all the way up to about 290/300. And this area between 296 and 261 is called the golden zone because that's the area where the 0.518 and the 0.62 are meeting. And that's normally the area that you want to go short after a massive bounce, which is why I have price target, greed, and hedge. And to explain those, number one, that is my price target because that's where the golden Fibonacci level is. Now, where I say greed, we are in an extremely, extremely greedy market. Now, that doesn't mean that the market has to continue to go up, doesn't mean that the market has to crash. Normally, what I tend to see in these types of situations when the market should do blank or when fundamentally blank should happen, most of the time it doesn't happen, which is why I don't really care about the news, which is why I don't watch CPI data. I literally just watch the charts and I blinders everything out. And you might say, that's stupid, but I've been profitable and killing it for 8 years. So what does that matter? Why do you need to have all of these different news sources and all of these different things? Like, I understand the point behind it, but I have noticed that most of the time the smartest people when it comes to economic data and when it comes to all of the news that's coming out and staying up to date, they're not good traders. I believe that it is very beneficial to just have a complete neutral, open mind when it comes to the market and to the direction. When the market's very greedy like this, tons and tons of retail who didn't get in down at 118, 140, 160. Everyone's playing musical chairs and they feel like there is no spots left. So I think that over the next couple of weeks and months, we're going to see retail continue to jump in. And as we start to move our way up to 220, 240, 260, 280 over the rest of this year, I think that that is where big money is going to start unloading their bag. And that's where they're going to start putting hedges in. That's where I'm going to be putting hedges in against my long terms because I'm actually profitable. I've been holding this position for like a year. And I'm actually profitable on this long term. So for me, I'm not going to be selling or anything. I'm going to wait for it to ride up to 260, which is where I think we're going to get. And then I think from there, we're going to see big money just kill retail. They're going to be slowly handing the bag because here's the truth. Somebody's got to be left holding the bag at all times, whether it's a 1 hour time frame, a weekly, whatever it is. And I think that that's when they're going to start to scale out. I think we're going to reject there. And I personally think we're going to end this year probably somewhere around $240 to $260. So once we get up to the 260, 280 range, I'm going to start not scaling out of my longs, but what I'm going to do is start to add some hedged put positions until I'm very hedged up at like $300 is my max, and then setting a potential stop loss up around 340 while I'm holding my long-term shares. So things look really good. I'm super happy. I'm going to be keeping you guys posted on my long-term positions as well as my leaps. And if you guys want access to any of my trades, they will be down in the description. Once you're over on the free Discord, just go to the upgrade section. And for $1 a day, you get access to all my trades. It's not going to be that cheap forever this summer. Since we have so many members, we're going to make the price higher. And this week alone, I'm up $16,000. So things are really good. I'm pretty happy. And I will keep you guys posted as the rest of this year goes on. Thanks for all the support. I'll see you next time. Peace.